Well, a little bit of a silver update and some of the market update. I know the Dow went up a little bit and the metals went down, but silver and gold is pretty much sitting in a trend channel and kind of bounced off the top of the trend channel, the usual kind of garbage. But what's going on? You know, a lot of the manufacturing data isn't that great throughout the world. The PMI is going up very slowly, but unemployment figures are looking bad, that type of stuff. But what the markets are really waiting for is the outcome of the FOMC meeting with Bernanke. So today you had a little bit of a hit on silver, a little bit of an increase on the Dow, but the markets are fairly steady. I know silver's a very volatile animal, so sometimes, if the Dow did a 1% hit today, it would be all over like, oh, the Dow sank. But silver's it's volatile. It's a volatile animal. But we have the Federal Open Market Committee meeting actually going on today and tomorrow. So the outcome of that, in other words, December 11 and 12, this is right off the federalreserve.gov site. So that is really why the markets are kind of sitting in anticipation of what is going to happen. So just chill out, relax, don't worry about it, because I think, we don't know. We don't know. But we do know this one given, that absolute fact, and this is where gold is going to have to go up, and I say silver is going to have to follow, is that they're going to downgrade the debt in the United States, the bonds. It's a big difference when they downgrade the debt in the U.S. versus Europe. When they downgrade some country like France or something, or Italy or Spain in Europe, or other countries in Europe, well, they all run to the dollar. But when they downgrade the U.S. debt, and this is what I'm expecting after they resolve all this kicking the can down the road garbage, that's going to be their end result. That is going to actually be extremely bullish for gold. There's not much left. There's not much left. And silver. So the word of the day is smash your TV and go ride a bicycle. Chill out, relax, save a couple of gallons of gasoline, that type of stuff. And old girl here is fixing her tire. And actually, for winter riding, this little hooded sweatshirt is probably pretty smart. It looks like if you're on a bike, actually the legs don't get cold. It's the upper body and around the head. So actually, this is proper attire for like a cooler environment. I know in some parts of the country it's extremely cold, and you're probably going to have to be wearing like a hell of a lot more to actually ride a bicycle. But that's the word of the day. But as far as like why the markets have been going down a little bit in the metals today, it's really anticipation. They're not going down that much. I mean, silver took the hit mainly, but it's more anticipation of what Ben Bernanke is going to do. And it's anybody's guess. If you knew what Ben Bernanke could do, damn, you could make a hell of a lot of money if you knew exactly what he was going to say beforehand, because all you have to do is bet on those days. Just chill out and play. Fold up. Don't make any bets on any other days. But that's really kind of like what my whole advice is. There's some things we don't know short term, but we do know gold and silver's going up. But we do know gold and silver's going up even in medium short term. You might want to call that the medium term, because by the end of the year, it's going to be a lot more clear as to exactly what the Democrats and Republicans are going to do with all the fiscal budgets and tax extensions and everything else that they said was going to be mandatory before. Well, it's not going to be mandatory, quite obviously. They were just, I'll just use the old expression, they were blowing smoke up their butts for, telling the rating agencies a bunch of nice stuff they wanted to hear, because the rating agencies were warning them. They were warning them again after back in September, back in October, November, all 2011, they were warning them. Oh no, these are mandatory cuts. We're going to be fiscally responsible, blah, blah, blah. Well, immediately, we know they're not going to. But what the rating agencies are really waiting for is, let's see the outcome of all this stuff, what they're going to do. They're going to kick the can down the road more. So the dollar's getting devalued and gold and silver's going up. But today, basically, some of the news is, the economies are looking weak throughout the world. The industry's looking weak, and silver's an industrial metal. Actually, silver's holding up quite well considering the general outlook in a lot of the economy. So after this meeting, I don't know what the heck is going to happen immediately, but I still think silver's going to finish up the year pretty strong just due to investor demand. The coin sales are up there, the ETF sales are up there. You know, the spot market, like I said before, it's kind of, you know, I just use the word, it is a bunch of bullshit. I mean, I don't know what the hell to say. I mean, that's plain English. That's exactly what the spot market is. It's like people are speculating which way this price is going to go, but in reality, the real investors are buying the metals. They're buying them even through the ETFs, and the mines aren't making enough money. So reality is going to catch up a lot faster than people think. It's not really great while you're waiting for the water to boil. I know that because you're like, or waiting for the phone to ring or some garbage like that. But when it's going to take off, it's definitely going to take off. And you know, we've been in this very classic long-range correction period. And if you look back, what happened even in early 2008 when all the metals reached up a new height and all this type of stuff, then they corrected, and then it took a few years for them to go ballistic again. So I'm expecting really, you know, we're going to start seeing things get closer to like silver getting well above 40 and maybe to 50 or more. But when it really takes off, it's going to probably be like late 2014 or early 2015. So, but you know, I just want to make sure, like, I'm actually going to probably update a lot more videos regarding health, because I think health is actually more important than silver. And, you know, I like the Harley Davidson motorcycle, but I got into the Harley Davidson motorcycle from bicycles, and I got into bicycles from running, which is all related to health. Health is actually more important than silver. More important. You'll be more wealthy by being healthy. That's an absolute fact. So, you know, I just want to say, smash your TV, go ride a bike, and, you know, just as far as today, you know, there wasn't really a serious downturn in silver for what silver is, the volatile animal that it is. The markets are just pretty much waiting to see what Ben Bernanke is going to say, and I don't know. I mean, if I took a guess, I think he's going to say a lot more, something positive for the metals, because I think he's going to say, you know, do more of what Ben Bernanke's famous for, more monetary easing, more money printing or whatever in some type of form, because it's like now that the election's over and he's pretty much secure in his position because Obama's here, I mean, he's not going to take too much heat for anything, really. There's not too much they can do. The economy's sick and they just got to give it more morphine, right? Now, I think Ben's going to give it more morphine till it croaks or something. I don't know. So anyway, you'll probably see an end result and where the direction of the metals tomorrow after the FOMC meetings all concluded on the 12th. I'm assuming it's going to probably something be positive, you know. But like I said, if you knew what the FOMC meetings were going to be about, you'd have a gazillion dollars because you'd only have to make bets on those certain days. But I would think it's going to be very positive for the metals. So I'm holding my positions. I'm not selling any silver. I'm holding till it goes to at least 50.